Good evening and thank you so much for joining us again on this edition of Capital Market. I'm Temple Ashaju. It's been a great week leading up to Christmas and the markets have performed quite impressively. So together, let's catch a glimpse of some of the market highlights for this just concluded week. We'll start off with the major story that we had this week, which is the inflation story. This week saw the release of November 2017 inflation report by the National Bureau of Statistics, which moderated to 15.90% year-on-year from 15.91% increase in October. The 12-month average percentage change also slowed to 16.76% from 16.97% in the preceding month, while the 12-month average percentage change for core index slowed to 13.93%. Core inflation rates rose year-on-year to 12.2%, while food inflation was unchanged at 20.31%. The rise in food index, which was the highest weighting, is attributed to increases in prices of staples such as bread, cereal, milk, cheese, eggs, coffee, and the list goes on and on. So let's bring you up to speed now with some market developments you probably missed this week. We'll start off with the FMDQ OTC, where the Debt Management Office this week listed Nigeria's $300 million Diaspora bond and $3 billion Eurobond on the Nigerian Stock Exchange and the FMDQ OTC Securities Exchange. The Diaspora bond was issued in June, while the $3 billion Eurobonds were issued in November at the International Capital Market. And explaining the essence of this listing, Director General of the Debt Management Office, Ms. Patience Oniha, hinted on yet another $2.5 billion on the way for domestic maturities financing.
The Diaspora bond is the first of its kind, and I would add that it was not only a very challenging product, but I think by the time we got into doing it, we realized that in reality, apart from the nation of Israel, only Nigeria was the only other country that had issued a Diaspora bond in its true form. Okay, so that was a lot of learning for us as a DMO and for the parties who work with us. And one of the fallout, so we can appreciate the things we are doing in Nigeria. I remember we were at a meeting at the World Bank, and we were invited to sit with several countries to talk about diaspora and migration. And we went in to just be part of the crowd, but suddenly we were the ones asked to speak just from one experience. So I think we are coming a long way as Nigeria, as institutions, and we should be very proud of that. And then the Eurobonds we issued in October, which is the second security we're listing today. The 30-year is significant, and let me start by saying when we started the discussions with the transaction parties, I told them that what would be sweet about the deal is if we can get a 30-year. Okay, so I think we should applaud them for taking us to that level. At the beginning, they were like, well, we'll see maybe when we get to that time. But it was good. Halfway, they were the ones talking about 30 years, so I just stayed behind the scenes. So they ran with it. If we look at the timing of that Eurobond, Moody's had just done a downgrade. And we had just also come from a bit of a period of political issues. And but we went and were able to raise 11.34 billion. That was huge. And people asked us, why did you take only 3 billion? We said, well, that's what we need for now. We'll come back again. So the point there is that, one, we're able to do 30 years. South Africa, and we know we have always said South Africa is more advanced, is a country that has issued a 30-year. Egypt did, but we know they had an IMF program at the back of it. So to just go clean and price yourself for 30 years, that was significant. But to also get that huge demand, it shows there is appetite. And as we do here in Nigeria, we get a high level of subscription. We take what we want and leave the rest for the other players. So we're expecting a number of banks will go take up part of the 11 billion that we did not take back. So all of this we're saying is a collective effort. The DMO is only the instrument of government to achieve these objectives. So let me go back a bit into history. Most of us were here. I can see some old men around here who have been in the market, and women. Okay, so the DMO was established in the year 2000. We know that. We know where the debt situation was. But one of the major objectives of the Debt Management Office really was to be able to move from the monetary space. You know how we were being funded, ways and means, treasury bills. When the ways and means gets high, we securitize it into treasury bills. And some people made a lot of money from trading in those securities. I can see their faces. Okay, so one of the key issues was we don't want to be drawing on ways and means. Let's issue securities to raise money for the government. And the reason was simple. We wanted to subject ourselves to the discipline of the market. So you tell us we have to comply with this set of rules, and we have a proper pricing. The second reason was if we're borrowing from ways and means, then we make a total mess of the CBN's monetary policy. So all of this strategy of issuing securities in the domestic market and in the international, that is where all of that is coming from. We started with FGN bonds, which were listed for many years on the Nigerian Stock Exchange, but there wasn't really much trading. So thankfully, we made some progress there with a government stockbroker. But some years back, based on all the things that we had achieved, and there's so many people to acknowledge, but I've always seen the financial markets, the traders, the dealers, as really part of one big family. So sometimes I don't see them as my counterparties. I see them more as friends. So you know where we started from to be able to develop a market. And then FMDQ is a result of all of that work, and see where FMDQ is today. So I think, in particular, I'd like to commend Coco and his team for running with the vision. Because these days, when any foreign investor asks for information, no, we just give them your website. There's no point. We don't, even when we have the data, we don't bother. So we link them there so they can always go there and get the data. Okay, so, yeah? You see, oh, I didn't know about that. We'll talk about that after this. Okay, so after FMDQ started, as part of giving a boost, the CEO approached the DMO to have FGN bonds listed. I don't know how he was able to smuggle treasury bills in later, but by the time we got the letter, there was FGN bonds and treasury bills. So all of those are listed, and I'm sure the operators are happy about that. Okay, so, but in rounding up, just making a final remark, I should say that we're happy with where we are. But on the part of the DMO, have we seen the vision, the dream that we're expecting? We've come a very long way, but we haven't really seen that vision, that dream materialize. So the challenge I'd like to leave with operators today, you know the debt strategy we're running with. We'll be in both markets increasingly. Okay, before we were largely in the domestic market and a little in the international. We started by testing the waters. But as you know from public information, we're going to be having some more balance and maybe more externally, so that we can do what we have been asked to do a long time, free up space for other borrowers in the domestic market and bring down rates. So the challenge I'd like to leave with the operators is we need to then see that corporate bond market develop. The rates have come down, and I should say the DMO still has $2.5 billion US to raise for refinancing of some domestic maturities. So the liquidity is going to get stronger. But we should see those corporate bonds come up in the market, because government is expecting that sector to drive economic development.